Alright guys, welcome back to the channel. In today's video, I'll give you an update on the USDJPY market from our previous analysis. To have an understanding of today's analysis, go and check out my first and second video, that's the episode 4 and episode 6 on the USDJPY. Alright, I called for this drop a long time ago after this trend broke out of this daily trend line. Okay, market was still trading along this area when I told you guys to be finding a sell opportunity. Okay, it was at this break of this trend line that was when we started selling on a lower time frame. All right, so I'm on the weekly time frame, so we call for this drop all the way here down to this place where the market is currently. Okay, but right now the USDJPY is still showing sign of weakness. Why? Because the market just tested a key resistance level. That's why you are seeing this retracement. All right, now this is more like a third touch of a trend line. First, second, this happens to be the third touch, so we might see some kind of rejection at this confluence area. All right, might see some rejection at this confluence area. Maybe market retrace. Let's go down to daily time frame. On the daily time frame, you will see this rejection clearly. Okay, all right, I call for this drop on USDJPY. I think 3 months, 1 month ago, a bit 3 weeks ago. Go check it out. I call for this drop, but right now we can also find another sell opportunity if you make use of the Feb retracement. All right, I'm on the daily time frame. If you make use of the Fibonacci retracement from this swing low all the way down to the swing high of the market. All right, now you can see how this market respected Feb retracement area. All right, that's where this was a breakout, a retest, continuation to the downside. So we might also see some kind of pullback from here at this support level down to this 50 Fibonacci retracement level. So all you might want to do if you miss this first drop of this market is to wait for this trend to retrace a little bit back into this 50 Fibonacci retracement area. That is this resistance area that form a confluence zone here, to be looking for another sell opportunity. All right, but that will only happen if this USDJPY break this trend line. All right, if you're able to break out of this trend line, all right, this is the first touch, second touch of the trend, so we might see a third touch of the trend. This market might just collapse to the downside. Okay, so at the third touch of this trend line, you might also be looking at to find another sell position, using your entry and exit strategy. But meanwhile, don't just be selling immediately at the third touch of a trend line. All right, there are some criteria, there are some strategies on how to trade at the third touch of a trend line. So we might see a third touch of a trend line before this trend collapses to the downside, or we might see a rejection, a retracement all the way from this blue bar, a retracement from here all the way from this blue bar down to the 50 Fibonacci retracement level. So at this 50 Fibonacci retracement level, that form a confluence zone here with this resistance area, you might want to also look for a sell trade. Okay, why am I saying this? Because the market is always, you can see from your chart, the trend is always respecting the Fibonacci retracement level. All right, this was the first touch of this 60 Fibonacci retracement area. The market drops. All right, so you might see another retracement at another retest at this 50 Fibonacci retracement. The market might also continue this move from here. Okay, but this will only happen depending on what is going on with the US index. Okay, if the US index is selling, the USDJPY is going to be selling. If it is buying, the USDJPY is going to be buying. So keep an eye on what is happening at the US dollar index. Okay, but if you are able to take out this trend line, the next level is going to be the 50 Fibonacci retracement level. So I will also be looking to sell this USDJPY at this resistance level, where this 50 Fibonacci retracement level and this resistance level meet. All right, that is forming a base there, a very strong base there that so many traders are looking at to trade. Okay, that's what this confluence zone represents. Confluence zone is simply an area where other traders are looking at to sell from or buy from. So okay, it's a strong base, it's a strong area where the market always tends to be rejected from. So yeah, now let's wait on what happened, on what will happen at this resistance, where this 50 Fibonacci retracement meets with this resistance, to also find another trading, another selling opportunity. Okay, but meanwhile, from monthly time frame, the overall trend of this market is bullish. Okay, go check out my first video. I've already done analysis on that. Go check out episode 4 and episode 6. I've already done an analysis on the overall trend of the market. Okay, so yeah, but meanwhile, we might also see a retracement from this demand level. Okay, from previous price action, the market is always respecting this demand. Tested the retrace, tested it one more time, retrace. This is the fourth time now the market is testing this demand area. So, but I will not be buying immediately here. Okay, I will not be buying immediately here because the trend is still very much heavy on this demand level. Trend is still very much heavy on this demand level. So all I want to do is I will wait for this market to, break out of this support, or you can call it demand level. All right, so at this retest, at the retest of this demand level, that's when I will be looking at to buy these markets. All right, guys, don't forget to like, subscribe, and drop a comment at the comment section.